Good morning, everybody. Welcome to our Thursday discussion, another of our Q&A sessions. We've got Vaughan and Pierre with us today, and we're going to be talking Capitec, a crowd favorite, with our clients. So, Vaughan, take it away.
As usual with Pierre, I can't add anything more. So Pierre's going to be doing all the presentation. I'm just going to be pushing the slides for now. So over to you, Pierre.
Thanks, Vaughan. So we're looking at Capitec. They are aiming to release their results on, I think, 18th of April. So this is a bit of a proactive look into that. So I think we'll just touch on some of our views on it, and then also just have a quick recap on the half-year results, which should pull through some of the drivers in the full year as well. So just starting off on the macro environment, we expect overall consumers to face pressure with inflation, rising interest rates. Specifically with Capitec, this bank has a bit more exposure to lower income clients. So we'll have to see the impact there as well on how that transpires on that end. On a valuation front, so when comparing to peers, because this is a highly profitable and growth bank, so it will have higher multiples. We, however, view that the growth rate's not forever sustainable that we saw in the, let's say, past 10 or 20 years. So we don't expect the valuation multiples to be at the same level, and they should derate. And then just on the main recap on the half-year results, they showed still some good growth and cost management, but it would have been offset by impairments, where in the previous period we would have had provision reversals, and the current years where they would have provided more. And then our overall recommendation is on a hold. That's based on the valuation multiples, which we expect to derate. So if it derates enough, that would change our mind to get back in again. Okay, so looking at the pre-provision profit. So in this graph, I just want to show the overall trend of the growth rate. So if you look at that dotted line, the rolling 5-year compounded annual growth rate, you can see how it decreased there to currently about 7% growth rate at the moment. Then if we go to the next slide. So taking that into account, so still the year-on-year pre-provision profit was quite well for all the banks. I just have some comparisons. We made them half year to make it a bit more comparable. Although the other banks will run from January to June, where Capitec would run to August. So slightly different. But overall, here we can see Capitec just slightly ahead of the growth that we've seen from the other banks in the half years, but at quite a larger price to book ratio. And below you can also see on that historic average how this did start to decrease over the period. And when Capitec also released their results, I think also the market saw that the growth rate is maybe not what they wanted, and that's why we're probably seeing this derating here. And looking at the next slide. So on the balance sheet with the net loans and advances, showing good growth there, still 23%. A lot of that's driven on the facility, access facility side. And then I thought it's just good to also take a look at the composition of the balance sheet. So you'll see those stacked bars, they add up to 100 there, and how the financial investments increased over the period. The reason why this is topical, as you know, like the Silicon Valley Bank, where they had to sell their investments, which were sitting at losses. But we think Capitec's not the same story, has diverse set of retail clients, where Silicon Valley was exposed highly to a specific group of commercial clients. And then on the next slide. So on the deposit side, we're still seeing growth there. Again, this is different to the US banks, where they started seeing outflows. Capitec showing some strong growth on the deposit. If you take that into comparison, so 9%. And then over the years, how they funded the business, you can see how it's made up of the retail deposits mainly. Now, just to touch on the half-year results and what happened there a bit. So, as you would expect, some of these drivers should follow through to the full year. On the net lending, investment income and insurance income, so they grouped that all together as a kind of a reporting line. The insurance side of the business showed strong growth. However, this is still a small component, so it's not driving the overall growth there yet. And then the net interest income grew by 11%, and that's mainly due to the loans and advances increasing. So Capitec's not as exposed in the short term, let's say, to the rising interest rates, benefiting some other banks on that side. And then the investments, they would have benefited from the rising interest rates there, although on the liabilities, it would have also increased. As we can see, the investment income up there, 31%. The net transaction income, I think that's a bit of a, we would have liked more growth on that side. If you think about it, this is quite a high growth company. And for the full year results, if I remember now, a lot of the banks were reporting around 7% there on their net transaction income. So I think with this higher valuation multiple, maybe we would have wanted some more growth on that side. And the operating expenses, very nice cost management there, although as with most banks, the salaries would make up a largest portion. And most of this cost, let's say, management containment was due to the incentives, basically just normalizing, and the overall salaries actually increased by 12%, still with a 3% headcount increase on that side. On the impairments front, so banks usually the profits can swing a bit because of this line item. So what happened in the previous period where they had releases of about 700 million, and the current period they provided for about 500 million. Apologies, it's the other way around. 700 million they provided, and the release in the previous period 500 million. So that would have caused a swing there, but Capitec, they noted that they still have a macroeconomic provision, so they expect the economic environment to deteriorate, which they have a 2.2 billion provision in place for that. On the overall environment, yeah, this is specifically from Capitec's presentation. You can see overall most of the metrics deteriorating as we've been watching the overall economy. The disposable income of households are declining, but I think specifically what's nice also to see this shows specific Capitec clients. If you look at the bottom right corner, you can see the cash stress type of clients also starting to increase in that chart. The impact, so the price performance, most banks have done well over the past 2 years, but Capitec is quite exceptional. If you look at it over the longer period, I think this share price has performed very well. I think most of all of us know this story where it's a big bank that done exceptionally well over the period. And then lastly, looking at the valuation side, so we think the price is quite at its fair price at the moment. That's based on it's a very nice company, nice profits, nice growth that we don't see at the other banks, but that valuation multiple, once again, I think that's a bit of the risk on this side. Thanks. That brings me to the end of my presentation.
Thanks, Pierre. Gee, you really covered it all. I have to dig deep to think of something to ask, because I was thinking to myself, this bank has grown and grown and grown, and we're not expecting a bad set of results. The trajectory just is slowing down, and you've showed that. And obviously we're thinking that despite the results that probably won't be bad, they've provisioned for bad debts, and they sort of add for around intrinsic value. So the only reason why you're really saying it's a hold and you're not keen on having this in your portfolio is because they're fairly expensive on a multiple basis.
Yeah, if I can get this just to feel a bit more comfortable on the valuation multiples, then definitely a nice bank. I think the management have proven themselves, high quality. You don't see that return on equity in the other banks. So yeah, it's a really nice bank to have. Just the multiples a bit high. People maybe think still the historic growth. We don't know if that's going to continue. Yeah, so that's the main view.
So we like the other banks, Vaughan, because of the corporate loans exposure. Does Capitec play in this space at all?
I'll let Pierre answer that one. Yeah.
Very small. No, they did start with the on the business side. So they have like the mercantile side, which they're gonna change the name to the Capitec business, and so. But it's very still small in the overall business. I can't think of the exact percentage, but yeah, it's not driving the main business what you're getting at the moment. So you're not gonna get that where we're looking at the commercial side and the renewable demand, all of that, where they get funding for that. Capitec will probably be the least exposed to that side.
Okay, guys, so sorry, I don't want to be asking all the questions. You're welcome to type your questions in the chat, or you can just switch on your mic and your camera and we can see you, and then fire away, ask your question. If you have any question, Pierre's covered all of the banks in the last couple of weeks, so I'm sure he's ready to take your questions on a different bank if you wish to ask as well, because his coverage here was very comprehensive. But please indicate and ask your questions. Feel free to go.
Perhaps while we're waiting, maybe Pierre, just remind the listeners that, in your bull bear base case, as you see, I've highlighted the price to book, and in your bull bear base, sort of you're bullish for those people who are most bullish on this stock. The multiple that you use off the top of my head, would you just remind us and just reference it relative to the peaks of the price to book that this company's got to over the period of time?
Yeah, so we did a bear bull and a base case, as Vaughan said, so where we think the share can go, and a lot of the upside that we actually see on it is due to the bull case. So in a bull case, we have an intrinsic value of 3,185. So that's a 93% upside. That's due to we actually used a very let's say kind of aggressive multiple there. We used 8.6 price to book ratio, which if you look at the history of Capitec, that's actually the highest that's traded. So we put that there as a bull case, so that drives a lot of the upside. So it's quite the investment case is quite skewed to the bull case. So you need to be very bullish or optimistic and think growth is gonna still continue with its future avenues. If you believe in this, and there is avenues that they're pursuing. I don't know if it's just going to grow that much. So for instance, your insurance business, as that starts to grow. But yeah, the bear case and the base case, that those present downside at the moment.
Thanks, Pierre.
Thanks, Pierre. I see in the chat there, Derek says Capitec dropped plus minus 16% since November. You say the current price is fair. Do you see any return to the November levels? And what was the reason for the high price in November?
Yeah, so like I said, we think it's now more to the fair side at the moment. With still, just as mentioned just now, it's if you have the optimistic outlook, so the less probability is kind of giving a lot of weight to the positive upside. So I don't expect it necessarily. We'll have to see what happens in the markets overall, especially with Capitec now reporting. Maybe we're going to start seeing the maybe some pressure on the clients there, because if you think about this, half year results was in August, and the interest rates only started maybe half year last year. So to that kind of play through on the pressure of the consumers, maybe we're going to see that. So it's difficult to say where things go. We've also seen volatile markets with the US, banks, Silicon Valley Bank, Credit Suisse in Europe. So all of that can swing markets quite a bit at the moment. I think the banking sector, it's quite interesting. So it's tough to say specifically what return to November. I don't think it's impossible. But overall, I think it's quite fairly priced here at the moment.
Vaughan?
Sarel, if I'm... Oh,
yes,
sorry.
Go for it. Marius, please.
A while ago, that company that did that Hatcher job on I think it was on Steinhoff, they also came out with a report, a real Hatcher job on Capitec. I can't remember who's that guys that did sort of stock manipulation with their report and then bought and sold or whatever. Whatever came with all the stuff that was in that report, and was any of it really valid, or was it just a Hatcher job?
Pierre, do you want to go, or do you want me to go? Do you want to go?
Vaughan, correct me if I'm wrong here, if I say anything, but if I remember the news or things that I read up on that a bit. So on Capitec's side, I think if I remember, they were almost there was some type of they weren't objective in their report. If I remember, it was Oasis or someone that kind of helped with pressured them with the report. So they were kind of almost forced to write this report. So it was completely unwarranted. They after the whole Steinhoff thing, it was Viceroy. But thanks, Vessel. That's the So I think it was Oasis and asked Viceroy to write a report on Capitec. So it wasn't a thing that they actually found. So it was not warranted research at all.
No, it was used for a hedgy to short sell, so it worked somewhat, but Capitec worked very hard to highlight the differences. So it was quite an unpleasant situation.
Gerard says, I would like to know what PSG's recommendation on the share was when it was at an 8 price to book ratio. Gerard, I think that's a difficult one to answer. I can't remember.
We haven't been positive the whole time. So fair play to Pierre. He's not going to blow his own horn. He's been concerned about this entire time, and we haven't had any. So it's been a good call from Pierre.
Okay. I think we would have. I can't recall us ever being bullish on Capitec because it's always been fairly expensive.
In companies too expensive. Hence, this is the comment about, in order to believe the bull case, you've got to put the price to book at the same level as the highest ever. Which, when you've got a forecast horizon of the growth slowing, it's quite difficult to get on top of that. It's a really high number.
Yeah. Okay, I've got a poll seeing that we've covered all the banks now in the last couple of weeks. I wanted to ask the audience the following. Let me just grab it here and launch it. The question that I'm asking is, which bank bank stock should form part of a diversified portfolio in the audience's view? And I want to note that you can actually select multiple banks here if you fancy more than one, but I'd like to see what the guys think and which ones they probably have in their portfolios. So if you could quickly complete that for me. Okay, coming in. Last couple of guys. It's fairly spread, but funny to note that the banks that we recommend, or the banks that we are quite positive on being Absa, FirstRand, and lately Standard Bank, are the ones that are most fancied, with Capitec and Nedbank at the bottom. We've had 21 responses, and 35% of the people are FirstRand positive, 25% are ABSA positive, and 18% say you can include Standard Bank in a portfolio. So I think the obvious choice here is to get involved and make sure that you own a couple of firsties or ABSAs then. We've included a technical view over the last couple of weeks, and I don't know, I can probably jump there and show you exactly why this is a hold on a technical basis as well. So Vaughan, if you'll allow me, let me share my screen quickly and show you this one. Let me just maybe present it.
Yeah, I'll make it just a bit bigger.
Yeah, then you can actually see what I'm trying to do. There we go. Is that big now? Vaughan?
Yeah, you've got it.
Showing?
100%,
Okay, great.
yeah.
Okay, sorry, I'm waiting for confirmation that I'm showing the thing correctly. So what I did here is, once again, I drew trend lines, keeping it basic. I included the relative strength, which we discussed last week. You'll see that is slap bang in the middle between 30 and 70, which is in no man's land, matching Vaughan's or Pierre's recommendation of a hold. I connected the dots at the top, and you'll see that red line slanting towards the right-hand side, which means this company is continuously making lower highs from a technical point of view. And at the bottom, we've got a fairly level line, sort of around the 1550 level, which shows where the support is, and it's just above that at the moment, sort of in no man's land. I've circled the bank troubles with SVB over the last couple of weeks, showing quite a significant drop in the Capitec price as well. And this pattern is called a descending triangle in technical analysis terms. Typically, this pattern is a danger sign that shows if it does break that support level at 1550, then it can continue lower. But at the moment, completely in no man's land, nothing to be done in Capitec from a technical perspective to match the fundamental analysis that Pierre's done. And that's it as far as Capitec's concerned. Let me run back to the session quickly and just see if there are any further questions. Vaughan, did you spot one in the chat maybe? Or
no, I'm having a look as well. I'm just seeing the poll.
It's just the results of the poll.
Yeah,
okay, guys, if there are no further questions. Oh, Theo's got his hand up. Yes, Theo.
So, hello, everyone. Thanks for this. Quite interesting, I must say. I'm more overweight in Capitec at the moment. And sometimes I go in and out, but I've had it for a long time, quite overweight. So I think what I've got to learn is to perhaps switch portion out of Capitec into ABSA. Do you think that would be wise?
We recommended ABSA purely on the basis that they've got exposure to the corporate lending scene, and where corporates are busy buying their own power generation capabilities. And obviously Capitec for us at a multiple, we're not considering for portfolios at the moment because we think it's fairly expensive despite the growth prospects. But we've seen the slant in the line that Pierre showed. So it's up to you. I can't comment on the balance of your portfolio and that, but from a banking perspective, we certainly favor FirstRand and ABSA over a stock like Capitec and Nedbank. If that answers your question, Theo.
I'll say thank you very much.
Okay.
It's difficult to look in the crystal ball, but over time it's been a good investment for me.
It's been fabulous.
Reposition.
Yeah, it's been very, very good. But if you look at it on the chart as well, I mean, this thing's coming from 2,400 Rand in April last year, and now it's sitting at 1,600 Rand. So given up a lot of that profit already. Maybe the hold is not a bad idea, but certainly exposure in the others to some extent is recommended, I guess.
Yeah. Thank you very much. I appreciate it.
You're totally welcome, Theo. Thanks for joining us today. Jean-Paul says, how does the panel feel about the ETF pre-Prax versus one of the bank-only shares? So, Jean-Paul, I don't know that ETF. And I don't know if any of the other guys have had any exposure to that ETF, but we can certainly try and
It's
find out.
not the SA bank, so it's an offshore banking ETF, isn't it?
How they know? So if I can come in,
Yeah, please do.
yeah, it's one of the tax-free savings accounts. It's the ETF Pref Trax, and you can actually also get it on the JSE. So it's obviously just the ETF. Sorry, I've got the thing wrong. Typed it wrong. It's the ETF with it's got ABSA, Standard Bank. It's kind of got a bucket of the banking shares instead of just the one share.
Okay, so it's more banking shares rather than where the FINI would have insurers as well.
Yes, I think it is heavily loaded on the banking side.
So Jean-Paul, the issue is there's twofold. So typically banks are highly correlated. So the benefit of that is that you get all the banks, and typically they all move together. But what we're trying to do is we're trying to get the banking exposure and alpha on the individual stocks. So we're going for 2 levels of alpha rather than just one.
Okay, thank you.
And I see Gerard's thrown a question in here, unrelated question, but what is the view on Tungela? A buy, hold, or sell?
So we don't cover Tungela.
We don't cover Tungela in our research, and obviously Pierre is a banking analyst to be asking a mining question. We could maybe have a look at it from a technical perspective for you next week, because next week we're going to be covering the mining and specifically Impala next week. Am I right, Vaughan?
That's right, yeah.
So then we could try and help you there, Gerard. I don't see any further questions. So, guys, I thank you for your participation. It was a nice chat. Thank you very much for a very comprehensive presentation, Pierre. We're going to miss you for the next couple of weeks, but Vaughan will be back next week. I won't be available next week, but Vaughan will certainly be here to help you guys along. And I suppose Matt will be doing some talking with you next week, Vaughan. Yeah. Thank you very much for joining, guys.
Yeah, we're going to focus mainly on the deal, the big picture of the deal, and what we sort of the moving parts, because nobody knows for sure.
Right. Thank you very much, Vaughan. Thanks, Pierre, and thanks everybody for joining. Have a fantastic Thursday. Cheers.
Cheers. Bye.
Yes.
Thanks, Pierre. Well done.
Thanks.